We are kicking off the second episode in our Calm the Fuck Down with Ron Friedman series. I'm still really proud of the fact that we just named the series Calm the Fuck Down with Ron Friedman.
I like it too. I like it.
Yeah.
Irreverency.
Yeah. You got to bring a little bit of irreverence into things sometimes, as we
Absolutely.
are known to do here.
We're traders.
So,
what we do.
Yeah. Everybody, thank you for being here. Thank you for joining this. If you missed the first installment of our series, Ronch talked about basically how he trades without getting pulled into the never-ending carousel of predicting what's going to happen in the markets, right? That was a really interesting episode. We got some really good feedback on that. So if you missed that one, highly recommend going back and giving it a watch. I think there's a lot of people in here who get caught in that game of trying to predict things a lot and would like to not do that. So go check it out. And today we've got a very buzzwordy topic here. This is like search engine optimized webinar topic. We're basically talking about the intersection of technical analysis and options trading, right? We're here to answer the question of how far can technical analysis take you when you're a serious options trader. This whole series that we're doing right now, the CTFD series, is a lead up to the launch of our new Trading the Post course, which I will have more details on later on. I'll have a coupon code for people who want to sign up for that for a nice discount. So stay tuned if you want to learn more about that. But to start out, or to get us started, we're going to go straight into the meat of today's topic, which is, like I said, how far can technical analysis take you when you're a serious options trader? And Ron will set the stage a little bit for the audience here. I think it's in, a lot of more serious traders, a lot of more like hardcore traders like to shit on technical analysis a little bit. And sometimes you can't blame them, because we've all seen YouTube videos of some dude drawing like random patterns on a chart and saying this is like clearly, an annexation of Puerto Rico pattern or whatever. And this clearly, if you saw this pattern, then you would have caught this move. And some of it is genuinely laughable. It's absurd. But then there's also, you're very hard pressed to find a trader these days, very serious traders who aren't either using a little bit of technical analysis themselves, or who aren't watching those levels at least to see what maybe the larger groups of traders are going to be going, like what they're going to be doing based on those levels, right? Like technical analysis is relevant kind of no matter what you think about it, I guess is one way to put it. So, Ronch, you learned a lot of your trading from very serious traders. From one of your mentors was a market maker, former market maker, Lucci, who's as hardcore as it gets when it comes to tape reading. You're a serious dude, but you're a professional, but you also use technical analysis in your trading. So let's start there. Like, how do you use technical analysis in your trading options?
So, for me, all of this kind of, there's a number of different parts, right? It's like making a soup or making a chili or a sauce, right? You can't have one ingredient and expect it to be a finished product. You've got to combine different ingredients. And if you know what ingredients to use and you know how to combine them and put them on the right simmer on the stove, you have something that you can actually use. So when I first started, a long time ago, when I was first a broker and I first had my Series 7 license, I couldn't look at a chart and tell you anything about technical analysis. It was just a bunch of squiggly lines to me. It made zero sense. I didn't know what was what. And then, I learned over time a few things like, oh, here are candlesticks, right? And then there's like this whole science and discipline just on candlesticks. And, you kind of delve into some of these things and you learn some things and you're like, well, not just one thing brings you to a decision or an area of probability, you've got to have a combination of different things. So over the years, what I learned was how to read a chart. What were the different types of signals? Where was the stock going, or what direction was it headed? Like, could I figure out what type of a trend a stock was in? Like I used to look at charts and then try to place trades, and I would be placing trades in stocks that were in downtrends, and I was wondering, why weren't they popping there? How come they weren't going up, right? Like, well, it's like if you have a combination of signals that tells you you don't have good probability, that's where technical analysis and charting really comes into play, right? So it's definitely not to me, it's not a specific science to take trades entry and or exits. To me, what it represents is, can you identify the direction of the stock? What kind of a trend is it in? Is it even in a trend? And what, based on that information, what type of strategy can I apply to it? And where should I apply that particular strategy based on what I see from the technicals? And then can I transfer that information over to the level 2 on the tape? And do I have something? Do I have a trade? So without technical analysis or technicals at all, I have no barometer to work from. I have to have something to give me some kind of a guide as to what is actually going on with the price action in that stock. And that's what technical analysis does.
Got you. Okay. So these trades that before we started, we were talking about you took down a nice trade on Amazon today, and then I think you said 2 in AMD. Did you maybe you could talk a little bit about the role that technical analysis played in your
I mean, what we look for. So first of all, I kind of have a checklist of things that I'm going through, right? So the first thing is, number one, can I identify what kind of a trend we're in? Again, like I said, are we in a trend, right? So right now, the SPY, the broad market, is under relative pressure, right? We're trending down. It's trying to tap the brakes and find a place where we can stop, right? So I need to be able to take a look at, okay, what are the different averages that make up this chart that are telling me that? So for example, with an Amazon, it's been in a downtrend. It's trying to break out of a downtrend. There are some things that I look for, like the 8 exponential moving average, the 21-day exponential moving average. Do I have a crossover of those? If I get a crossover of those in either direction, it indicates to me that there could be a change in direction, right? Mm-hmm. So I see some of those things and I make note of them. I put some alerts on my screen and I look at, hey, is Amazon going to get to a level where I might be able to trade it? So this morning, my whole thesis on Amazon was, well, we're still under pressure. There's still nonsense going on globally. Amazon has tried to move up, and it's at an area where I don't think it has enough momentum to keep pressing higher. I think it's going to pull back to one of its moving averages, and that's what I traded this morning, and that's what happened. Now, again, it's not to say that, oh, this particular line is the magic line. It's to say this is a guideline. This is where I think things could go. This has probability based on what it's done in the past and how it's acted around these specific types of technical areas, right? Mm-hmm. So that's what I'm using. So today it was, Amazon didn't have a strong push yesterday into the close. It faded off. So I was thinking today on any kind of a move higher. To me, it was going to be suspect unless it came up to its 50-day moving average. It didn't get close and it started to melt. So I took that trade short, and it came right back down into its 8 and its 21-day exponential moving average. And that was where I exited the trade, because I knew at that point that my probability of it continuing to go lower was starting to decrease. So that's how I'm using those areas. Does that make sense?
Yeah. Yeah. And everybody, I would imagine this is a topic that people are gonna have a lot of questions on. Just feel free, when you have questions, drop them into the Q&A portion of the Zoom webinar chat, and then we will do a Q&A at the end. So anytime you're curious about something, just drop them in the Q&A section. So I think one of the things that you said in there that's pretty important is that you set alerts on your platform around key levels.
Yep.
When did you start doing that?
When I got sick of missing trades.
Cool.
Truly. I mean, you know, I think especially for traders that come into our room, they get beat up a little bit when they first start. And the reason for that is to make sure that they are applying what they learn, right? So
when you say they get beat up, you mean you beat them, you slap them?
Yeah, I mean, I'll give them a poke, like, hey, like, don't talk about a trade that you missed, because if you missed the trade, that says to me that you weren't setting an alert, right? So it's a little bit of a, hey, wake up, right? So it's like, hey, you know, I'm not in here, you know, just doing this for shits and giggles. I'm in here trying to help you become a better trader, right? So that's just one of those basic things that's going to help you, is to say that I'm interested in XYZ at whatever price it is. But if you don't set an alert and you'll go about your day, 9.9 times out of 10, that trader comes back and is like, I had that area picked. I missed the trade.
Yeah.
How many times do you hear that?
Yep.
So if you don't set an alert, that's going to be you until the cows come home. Right. That's just a very basic function of what you're doing. So for example, you're like, all right, I've got whatever stock it is. My trade is the thesis is based on whatever time frame it is. And if it gets to this price, I'm interested in executing a trade at this particular price. But then you don't set the alert. Like, why wouldn't you just set an alert? So that you get an alert for when what you're looking for, what your thesis is based on, reaches that point. Why wouldn't
like just make it easy on yourself? Like, why are you making it? This game is already very hard. Why would you?
Exactly. So I mean, when new members come in, I'm always like, hey, you're gonna miss trades unless you start setting alerts. So I mean, I there's some things that I harp on, and that's one of them is to say, all right, listen, we've spent all this time looking at these different techniques that we're applying, and we've identified an area as an area where we'd be interested in whatever trade it is. Set the alert, so now we can continue moving on and looking for other trades.
Yeah.
So you know, I've used alerts for a really long time. I don't know exactly when, but honestly, that when I got sick of missing trades is when I started using alerts.
Yeah. You mentioned something before. You were talking about time frames. Can you talk a little bit about how, you know, because that's one thing that you teach a lot in Trading the Post, that you speak to, is how to work on different time frames and view the markets on different time frames and utilize time frames.
Yeah, for sure. Because the trading, you know, Trading the Post is based on a long-term type of trade. And for an options trader, a long-term trade is 12 months, right? For, you know, the normal investor who's looking long-term, 12 months is very short-term, right? But for us, it's long-term. So I'm always looking in terms of, okay, if I'm in a longer-term trade, I need to find areas of support and or resistance. In other words, levels that whatever stock I'm interested in has come to over and over the course of a number of years. So I'm always starting with the big picture. So I'll always start with a chart that is weekly candles, and it's a 5-year view. And I start from there, and then I look for levels, and then I shrink the time frame to a yearly chart, which gives me daily candles. And then I see how often things repeat on a smaller time frame. And then if I'm looking at intraday trading, I'll shrink that chart down from a yearly chart or a daily chart, and I'll shrink it down to an hourly or 65 minutes. Because we don't have an even number of minutes in the trading day. So you got to use 65 minutes, not 60 minutes. And then I'll boil it down further from there. And if I'm looking at scalp, I'll use a 5-minute chart or a 1-minute chart in combination with some other things like level 2, order flow. And, then you're starting to, to differentiate the different types of trades. So big picture, you're using a bigger chart, and then smaller picture, smaller time frame. That's how I correlate them. If I tried to trade, let's say, using information from a 1-minute or a 5-minute chart, and I was trying to trade something long term, it would never work. And the same is true if I did it on a big time frame. Let's say I'm looking at a weekly and I'm trying to scalp. It's not going to work.
Yeah,
the time frames don't match up with each other.
Right.
So I always go big picture to small picture. It's just a concentric ring of evaluation.
Right. Yeah. And just the way you said that, like, I always go big picture to small picture. I mean, I think what people will pick up on is that you're process oriented, not in like a super rigid way, but you're just like, I've identified things that work and that put probability in my favor. So I'm going to keep doing the same thing over and over. Like, I have a method. And I think that's one of the reasons why you help people calm the fuck down, is because they're like, I have a method here. I know that there's a process that I can follow.
It's interesting. And it's, I used to not believe a lot of it. And like when I go on Misfit Happy Hour with Katie, like he'll give me a hard time, right? Like I was using the analogy when I was talking about skiing, and I'm telling you that this shit is real. When you're skiing and you're skiing on one side of the trail, and let's say you're on like an intermediate blue, or you're skiing a groomer, right? And you're on the right hand or left hand side of the trail, and all of a sudden there's like a grouping of people. When you're, and I'm not tooting my own horn, but when you're the better skier, people are looking at you and people are gravitating over to where you're at. So I will stay on one side of the trail. I'll wait until I get these people pulled over, and then I'll rip over to the other side of the trail, and then it's open again.
Right.
And so it's similar in some respects to stocks, because they have a tendency to come back to similar price levels again and again, regardless of whether, over time you're going to be bottom left to top right, but it's never bottom left to top right in a straight line. There's movement up and down, and there's pricing along the way, where if on a chart you look left on a chart, very simple technique to use, you can see areas where the stock continues to gravitate to, right?
Yeah.
It can be like magnets. So, people that discount like some of the moving averages, they're just missing out on relevant information that can help them.
Do you find, because one of the things you talk about in Trading the Post, one of the things that gives you edge is that you are like a local in a lot of names. These names super well. You trade approximately 30 names, right?
Yep.
Do you find that you can read like those levels even better in those names from watching them so much, like that?
Yes. I mean, what we use and what I teach everybody is, my technical analysis, when I say big picture to small picture, I start with, what I refer to, and I try to keep it as simple as possible. I use 5 moving averages, right? I use the 8, I use the 21, I use the 50. So from an exponential moving average, I use the 8 and the 21, and then the big moving averages, I will use the 50 and the 200. And why do I use those? Especially the 200 is because that's where larger institutions are known to either add or cut positions, right? So if you're at a major moving average, you can look for change in level 2 tape, and you can take advantage of something either short term, or if it's, like I just described, like in the 8 EMA moving over the 21 EMA can signal a change in direction. And then all of a sudden, oh, here comes the 200-day moving average. And why is this stock selling off so hard? And I can look at level 2 and I can see, okay, if I combine all of these things, I have something to use that I can trade from.
I think, and that's what you just touched on is what I wanted to get into next. So the limits of technical analysis, right? So
Yeah.
what if somebody came to you and said, I actually just am only going to trade based on technicals. I don't need anything else. What do you think? Where would they be limited? What would they be missing? What would be the blind spots in their trading?
I mean, everything that, what trumps technicals is price action, right? Like Joe Biden getting on the mic, Vlad moving his tanks into the Ukraine. That kills any technical analysis, right?
Mm-hmm.
It just, that nullifies everything. It's the 0 and the 00 on the roulette wheel. And
right.
you'll never see it coming.
Right.
Technical analysis is not going to tell you that that's coming. So, there are limitations, but what we're doing is we're looking for areas of probability. It was like when I described last week, hey, what kind of economic news, do I focus on? I don't. I just focus on, I know it's coming and I know what time it's coming. Whereas if you're using technical analysis and there's a tape bomb or there's a headline or somebody says something, you just can't see that coming. Technicals are never going to tell you that that's coming. So that is a blind spot of technical analysis for sure. But that's why, you spend the time learning how to do other things besides just technical analysis.
Right. And for you, that's tape. That's tape reading. And
it's tape. And, there are other clues that we look for, like when we're looking at long-term prospects, like, recently, Asana, like the CEO of that company, that stock has been badly beaten up, but the CEO pulled $80 million of his own money out of his pocket to buy his stock back. That's a very strong buying signal to me after a beat down, and you find, a bottom and a place where the stock is moving sideways and now has an opportunity to move up. If you see insiders buying stock, that's a tell. Technical analysis isn't going to tell you when an insider is buying stock, right?
Yeah.
That's another piece, another ingredient you need to add to your soup. And if you don't know about it, or you don't know where to find the information, you're going to miss.
Right. Yeah. And I think that that's one of the things, for you, it can be a little bit hard to pigeonhole you as a trader, because I think Lucci uses a lot of different methods, but at the end of the day, he says, I'm a tape reader. That's it, and he loves to say, like, you put me anywhere in the world, but if you give me time and sales on level 2, and an options chain, like I'll trade. And I think for you, you're coming in, you have a confluence of a lot. You retape, but you also use fundamental analysis. You're using technical analysis. Like you have a multi-layered approach, and you're bringing it all together into this one, one sort of output.
Yep. And I mean that, to your point, what Lucci likes, I think, about the trading the post room is that I'm constantly scanning and looking for areas that are going to be decent entries. And if I signal them, Lucci will just go right to tape. Yep. And he'll, today AMD was a good case in point. I was like, hey, I'm seeing something in AMD right now where if this thing gets over its high from yesterday, I was like, I'm pretty sure that this can trigger at this level because of what I'm seeing. And then, Lucci just jumps in and he's like, yeah, I see it. And, he jumps in. So I think he likes that I'm bird dogging stuff, and he can just go to level 2, and he doesn't have to do all that work of looking at the charts, right? Which is actually really great, because when you have Lucci in the room and, I say, hey, I see something, and he's like, yeah, I see it too. That helps everybody. You know what I mean?
You got
that helps everybody.
A freak of nature when it comes to reading tape, sitting in there telling everybody this is what's going on. And and just so you all know, Lucci's going to join us next week. So that's Tuesday, February 22nd for conversation about trading options with Ronch, which should be really interesting because he's spending a lot of time in the trading the post rooms these days. He spends way more time in the trading the post rooms than he does really in the Wall Street Jesus Steam room. So he'll have a lot of data. Yeah, there's people in the chat saying 100% Lucci and Ron in the same room as money. Yeah, that's pretty potent.
Yeah, it's good for all of us. It's good for me too.
Yeah, it's a good 1-2 punch, and that's one of the upsides of I think of being in a room like what you were just calling out. You have you're zeroing in on these areas, on these key levels, and you've done a lot of work in terms of looking at the fundamentals of these companies that frankly a lot of people, maybe that's just not their style or they're not willing to do that work, but they don't necessarily have to do that work if they're in the room with you and you're there. If they want to learn how to do it, obviously, we're going to talk about the course. They can learn how to do that, but they can also just be in the room and you can do some of the work for them. That's the upside of being in a room.
True.
One of the other things I want to talk to you about is, the intersection of technical analysis and options trading, right? Like your options trading is relatively complex and multi-dimensional. You're not just going long calls. And I'm curious, like when your options plays start to get a little bit more complex and you're, rolling and you're morphing and you're putting on iron condors and all that stuff, like, does that ever render technical analysis to be like a little bit too simplistic, or is it's still just as applicable? You're just doing it in different ways.
So as on the longer term positions, the technical analysis. So I teach rolling, and we roll one of 3 different ways. Using technicals is one of those 3 ways that you can roll. So if you're, whatever it is that you're trading reaches a technical level, it's like that's an appropriate place for you, to roll something, right? Or if we're scalping and it's a day trade and you get to a bigger technical level, I'm always like, hey, you either need to consider taking some profits here, or at the very least, now just go buy a lotto strike with a portion of your profits. You don't want to use all of your profits, right? Because that's just how you get T-boned, right? Somebody comes in, they're like, I got 10 grand and I just turned it to 20. Now I'm going to take the 20 and YOLO it on, lottos, like, and hope that the run keeps going. That's a mistake, right? So we want to make sure our traders are not doing that, right? So we want to make sure that, hey, yeah, this thing has run to a technical level. It still looks like it has strength or, juice to keep going, but we want to make sure that you're managing the trade as well in case that this area, this level is for whatever reason resistance, or now it's support, right?
Right.
So it is very helpful. What technical analysis won't do for you, especially in some of the longer term trades, is it won't help you with things like implied volatility. It won't help you with things like theta, right? It's not meant to help you in that department. Specifically, when it comes to the options, you have to be somebody who understands how to read an options chain and can look at things like implied volatility. And you need to know where to go to gauge if that implied volatility is overheated, or if it's, if it's underdone, right? Like we teach you how to look at how to correlate VIX with implied volatility in, your options. So you want to check the controls before you just turn the car on and go, right?
I like that.
Is there gas in the car or not? Where the hell are we going?
Right. So, the summary of it seems like, and obviously we've thrown out this, technical analysis as though it's like one thing. I mean, there's like 1,000 different, ways to do technical analysis, and 1,000 different traders who say they do it will do it in a different way. But it sounds like the gist of what you're saying is, yeah, it can really help you zero in on some key spots in a name, put things on your radar, set alerts for those things, draw them to your attention when you need to be paying attention. But it's certainly not going to be all that you need, all the information you need in order to pull the trigger on a trade with a high degree of confidence. Like at that point, you're going to need other levels of analysis, and especially if you're talking about trading options, you know, you got to understand some things about options that technical analysis is not going to help you with.
True.
Cool. All right, there's the
Very
summary
true.
for you. Okay, so let's get some questions in from people. I'm seeing a good number of them in the chat, so we can do that. I said I'd give some information on the course that we're launching, so I'm going to do that now. We got a new course with Ranch, Trading the Post live course that is launching on March 7th. You can learn more about that if you go to tradingthepost.com. We had a ton of demand for this, which came out of Ron teaching some classes in the master course, which is our flagship, educational course. We do it once a year, and we come out of that, we do surveys, and we just saw in the survey results, asking people, hey, how do things go? People were like, you guys really should just do a dedicated thing with Ranchero and Trading the Post. It was incredible. It was awesome. We love learning from this guy. And I think especially if you're somebody who tends to get kind of caught up in your head, pulled into the emotional side of things, really kind of tossed around. If you feel like your timing is way off, you're often late to trades. You don't really have a high degree of confidence in what you're pulling the trigger on. We've seen a lot of people who report that, being like, those problems were fixed for me when I started using Ranch's methodology and Trading the Post. So, what you get in the course is 8 classes live with Ranchero. So him teaching you his methods, everything that he teaches you can see on tradingthepost.com if you go there. But teaching you everything about his methodology, to how he's managing his trades and his positions. And then you also get 3 months of access to his room. So let me share my screen here for a second. Whoa, Zoom is freaking out right now. I can't even see what I would be sharing if I did that. So let me make sure that I don't share something crazy. We'll see what happens here. Zoom is crapping on me. Oh, it's not going to let me share my screen right now. Don't worry about it. If you go to what I was going to show you all is in our platform, there's a number of different rooms that are dedicated to Trading the Post. And you get access to those for 3 months. That's right there, $600 worth of value. The course is $1,500 without a coupon code. That's $600 worth of value right there. And we're doing a money back guarantee. So if you go through the course and you are in there for 3 months and you say, I'm not satisfied, my trading has not improved, we'll give you your money back. We have a really high degree of confidence in this program with Ranch. So we're not really that worried about that. So we highly encourage you all to pull the trigger and give it a try, knowing that it's no risk to you. Again, it starts March 7th. And also, if you sign up now, those 3 months of access to the course rooms start on March 7th. So if you sign up now, we're going to give you free access to the course rooms and a bunch of educational videos that we already have in there. So highly encourage you all to, if you're going to do it, hop in now and get signed up, because you're going to get free access from now all the way up until March 7th. Just that's on us. You can save $250 on the course by using the coupon code ThePost250. So I'll put that in the chat. ThePost250 at checkout. That'll save you $250. And then if you're a Steam Room member, or you've taken another course with us before, definitely shoot us a message in the chat. Talk to one of our guys, our support guys. We got an extra coupon code for you that'll hook you up to an even greater degree. So that's the pitch. This course is, we put a lot of work into this thing. It's going to be pretty badass. And especially if you're listening to Ranch talk and you're hearing about him, getting a little more exposure to him, and you're like, something about this guy resonates with me. Highly encourage you to give it a try and pull the trigger. You literally have nothing to lose. So, and if you're already a TTP member, which some people are asking, message Nico or Eric or Matt in our chat. We got a completely separate arrangement for you because you're already a subscriber. So that's a completely different deal. All right. Let's get some questions. Ron, Christopher Lynn is asking, any other technicals besides EMA in your usual toolbox?
Yeah, like I said, I'm using for technical analysis, I'm using the 8, the 21, the 50, and the 200 from, here and there, depending upon what it is that I'm looking at. Sometimes I'll use the 113 EMA. Sometimes I will use the 5-day EMA. Sometimes I will use the 10-day. It just, it's rare that I do that. I like to just keep things simple. So I usually just have the 8, the 21, the 50, and the 200. And then the other thing that I use that really works amazingly well in so many scenarios is anchored volume weighted average pricing, or AVWAP. And we teach that as well. And anchored VWAP is a really, really great tool for people who are either not really good at reading tape or like to have a visual. It's a really powerful tool to use, especially when you get into a trade and you're managing the trade. It's a really valuable tool.
Yeah, we know. It's really interesting to hear you say that, because as somebody who knows how to read tape, like, I think you have credibility in terms of weighing in on the value of these other methods of analysis. And for someone who can read tape to say, if you don't want to read tape, this is something else that you can use. I think that carries a lot of weight. So
yeah, it is very, very close to having level 2, really close.
Yeah. All right, let me see what we got. Ranch, in a world where everyone online is looking at the same setups and charts in a few stocks, it's common for market makers to hunt stops and take people out in crowded names. How do you avoid these situations? That's a good question.
Stop using stops. Stop hunts are a time-honored Wall Street tradition, and you are cannon fodder if you set stops at levels where everybody else sets stops. The banks see you and they will take your money. Thank you very much for coming. So if you're aware of that, you again, same thing, you set alerts and you use levels. And after you get done with class, and I teach you how to use some of these moving averages, and I teach you how to use anchored VWAP, and you get a taste for level 2, you will start to see the light. So that's how you stop getting stopped out, is you have a way of looking at it and saying, this is the area where, in the course of a day, you'll see stocks that just don't go straight up. They pull back and then they go up. Those are little mini stop hunts, right? You've got people who are making money, who are entering trades late, and they get a little cushion, and then they set a stop, right? And then bang, they're like, oh shit, I got stopped out and I lost 10 cents. So they're like, well, why did you do that? Right? Like, why did you set your stop there?
So, follow up to the last question, do certain technical analysis strategies lose their effectiveness once everyone's trading the same indicator?
Yeah, of course. I mean, that's the same with everything, right? And that's what everybody says is the giant hole in technical analysis, is that everybody uses it. Well, part of the good thing of that is that everybody uses it, right? So if you know at these levels that you have potential to see change in the level 2, the order flow, that's where your advantage is. That's where your edge is. The lines are not there to tell you this is where you enter and this is where you exit. The lines are there for you to say, this is where I need to be paying attention. I can't tell you how many times you go through a day where we see order flow and things are coming in, and I'll be looking at a chart, and technically where these players are coming in, either buying or selling. And I always wonder, I'm like, why here? Why are they doing it here? This spot that they're doing it does not give me any edge. It's like in the middle, right? Mm-hmm. So if I wait for a certain period of time, usually what happens is you get some type of a move back to or up to a level where now I can pay attention and see if the behavior changes. And if the behavior changes in the way that I want or expect, I have a reason for a trade. Make sense?
That, yeah, that makes a lot of sense. And I feel like what you just said, the levels don't tell you when to make a trade. The levels tell you when to pay attention.
Correct.
That's a pretty important distinction right there.
Huge.
So
It's huge because,
yeah.
when I first started doing it, I was like, oh, the lines are magic and I'm just going to trade at the lines. And that's not how you do it. You're just going to get smacked around.
And that's what I think gives technical analysis a bad rap, and why so many, professional traders like to take shots at it, when you pull up a video of somebody being like, I saw this line and this line and this line, and therefore that you're going to take this trade. And it's like, that's not how it works, but yes, you can say I saw these lines and so I started paying attention there. And then, with further information, I pulled the trigger.
Yep.
Yeah, that makes total sense. Are you guys seeing option price spoofing? I'm seeing hundreds to thousands of daily bids, which are in the queue and then evaporate on a tick down to the bid.
Yeah. I mean, spoofing is another one of those time honored traditions, right? I mean, people will throw orders up and take them down all the time. And, there's supposed to be some type of regulation around some of it, but good luck. They're not going to catch those guys. Right. So yeah, of course that's another thing that you need to be careful of, is when you see the options market having an effect on the underlying security, it's the tail wagging the dog. And you've got to recognize something like that as this could potentially be a problem, right? This potentially, and that happened in Tesla, right? In Tesla, there was so much activity in the options that the underlying had to move to where the bulk of those options were trading. And it did it on the way up and as well as on the way down. So the options market at times can influence the underlying stock. And when you start seeing those orders go up there like that, you've got to exercise some caution when you're trading. So that's why, again, it comes back to, am I at a level? How is the underlying acting? And is there activity on the options? Like, today for the AMD, it was like a ton of, we were at a technical level. The market was trading sideways. The techs were starting, the semiconductors were starting to heat up. You could see orders coming in on the underlying, and then all of a sudden, order after order after order starts hitting on the call side. It's like, I have really good probability here. I'm gonna call this out. I'm gonna say this is what I'm doing, and then Lucci's right there. He's like, "Yep, I see it too." It's like, okay, we have good probability. It doesn't mean we're going to be successful. We have good probability. We're taking the trade, right?
Yeah. And when you say, and Daniel in chat's asking, where is Ron seeing order after order after order hitting? You saying in the tape, you're seeing order after order hitting?
I'm seeing it on the level 2 in the underlying, and I'm also seeing all of the option sweeps are coming in, and they're getting posted to the board in the room, right?
Yeah,
so I can see.
Room.
I don't know. Yeah. I don't know how many. Yeah, in the steam room. I don't know how many sweeps came in on AMD, but with experience, when you see a certain level or area, and you see change in tape, and then you see option orders coming in, orders being swept, from experience whether that activity is giving you good probability or not. And when we see it like we did today, we've seen it in the past with AMD. We know we have a very high probability of a trade going the way we want it to go.
Do you also teach tape reading in the upcoming course? The answer to that is no. Ron will teach you some principles that you're going to learn from tape reading, and that, some theoretical concepts and market dynamics that you would know as a tape reader. But if you really want to learn specifically how to learn tape, that's in the master course. You can learn more about that if you go to sayinglucci.com/MC. Ron teaches as part of the master course too. So, he's in there, but this course will not teach you how to read tape. Ron, how many alerts do you generally have on at one time?
How many open trades? So like for trading the post, I'm for my long-term trades, I'm pretty good up till about 5 names. If I go past 5 names, it's too much activity for me to manage day to day around those particular trades. On a scalp or a day trade basis, probably only, I'm calling things out all of the time, right? And there's a good basket that we like. And the other traders in the room, there's a good handful of traders that you'll pick up on that just trade 1 or 2 stocks. And really that's all you need, regardless of what's happening on that particular day. It's really all you need. So I only had 2 trades today, Amazon and AMD, and that was all I needed. Like I have other open positions, but I don't need to actively manage them all of the time. And I can, on the long side, I can only handle about 5. And then on the scalp side, I'm only looking for 1 or 2 names because that's all I need. Now, there are definitely days where I don't do as well as other members in the room, or I, off the open, don't pick the right flavor of the day, where other traders will like have a great day on Tesla and I've just had a mediocre day on Amazon. But that doesn't bother me. I keep going back to what I know, and I keep sticking with the trades that work for me and the names that I like to look at. So I can't tell you how many names I spit out in a day. The members would probably be better to do that, but I mean, I'm constantly spitting out ideas for long-term, mid-term swing, and short-term. Plus, we've got condors that we look at on Wednesday. So there's plenty of opportunities that get spit out on a daily basis. Maybe there are probably some TTP members in here that can speak to it, and maybe they want more. I don't know.
I think people seem pretty damn happy.
It's not this is what you buy, where you buy it, this is where you exit. We're teaching you how to fish, right?
Yeah.
And if you don't like the river we're fishing on, you can fish on a different river. It's fine, right? It applies to all rivers, right? And all rivers and streams.
Is option flow another tool you use personally, or does it not matter with your particular strategy?
Again, it's part of the soup. So if everything that I'm looking at lines up, like this morning, everything that I was looking at was starting to line up. And not more than 10 seconds after I typed the line, I was like, I'm liking AMD here. Bang, AMD gets swept. Bang, it gets swept again. I'm like, okay, it's on, right? I'm like, I know I'm on it. And I don't know how many days we have where I spot something like that. I'll type it in, and then a couple of minutes go by, and sure enough, it gets swept, right? Yep. So that happens a lot. That happens a lot.
Do you offer a course that focuses only on options? Let's say we already have experience with level 2 in technical analysis, but we would like to learn more about options. I mean, I would say that this course is, I don't know. I mean, it's kind of hard to separate it all, but this is a lot of this is about options. Certainly you're not coming in here learning primarily about technical analysis or anything, Mylan. This is, I would go to trainingthepost.com and, look at what's in there in terms of talking about what you're going to learn. But this is really about learning options and how to trade them very effectively is what I would say to that. Let's do one more. Ron, is learning level 2 valuable for a swing trader, or is it only practical for scalpers and day traders?
So typically, like for swing, typically you're looking at like a longer term trade. So you're more concerned with, hey, I think a stock is moving from here to here, right? Like I have some ideas and some targets. Now on, let's say you get your move and you've entered correctly, and the stock is getting to where you think it might be, topping out, then level 2 can be handy, just from the sense of you saying, okay, my target is 100, the stock's at 99, but can I look and see if it's starting to lose some momentum? Do I just need to take profits now? Because it's not an exact science, right? It's part art, part science. Sometimes you're gonna get your entire move, sometimes you're not, sometimes you're gonna get more, right? So if there was something that could identify the perfect spots, I would use it, right? And but everybody else would, right? It's not
Right.
it's not show up and get money. It's show up and, you've got to do a certain amount of work and come up with a thesis and be willing to take some risk, and accept what that risk is. And then, when you're right, you're rewarded.
Yeah.
And when you're
Well
not,
said.
you recognize it. And the most of the time, what separates retail from pros is recognizing when you're wrong and cutting a loss at a size that allows you to move on to the next trade. A lot of retail traders just don't do that well at all.
That is probably the thing that you get the most credit for, I would say, in our community.
Mm-hmm.
And the praise that you get is we pushed a clip out earlier to the St. Lucie Twitter feed that was a quote from the last webinar. You're talking about like an acceptable loss for you is maybe $1,000 a day, and most of the time your losses are in the hundreds of dollars. And
Yep.
you trade a sizable account. I mean, those are very, very, very small losses for the size of your account, but that's one of the reasons why you trade that size of an account, because you keep your losses so small. You're not taking 5-figure kicks to the nuts that you're
Correct.
pulling yourself out of financially and mentally.
Yeah, those days are gone.
Yeah, those days are gone for a reason, and that's one of the reasons why people really like your system. They like how you trade. So we are going to be back, like I said, next week, 1 week from today, with Lucci. That'll be a great conversation. These guys talking about options trading in this new sort of paradigm of the markets, which is a whole new ball game in many ways. So that'll be really interesting. You can always catch Ranch on Wednesdays, Misfit Happy Hour, hosted with Chris Cady. That's just a great opportunity for you guys to listen to these two bullshit and talk shop, and oftentimes have a guest on 4:15 Eastern. You can catch the links to that on our Twitter. And like I said, tradingthepost.com, go there, check out what's up with the course. The coupon code again is the post 250. That'll save you $250 on the course. It's a pretty insane value, especially when you consider that there's a money back guarantee on it. So we're trying to make this as much of a no-brainer for everybody who wants to learn from Ranch as possible. Ranch, thank you for being here. Everybody who's here, thank you for being here. And we will see you guys next week with Lucy.
Thanks, Charlie. Thanks, everybody.
Yeah, thanks, everybody. Peace.